And if you look at the technical classic textbook kind of pattern, this was 2011, this is 2015, this was 2020, and we are probably somewhere here, all right, at the moment. So all it takes is this breakout. And I thought as well this summer that maybe gold now is ready. It seems that it takes another round of patience and waiting, but it will come. And once it comes, you take the depth of this cup and put it on top of the breakout, and you then wait first for a pullback towards this long-term current resistance, which will then be support. Yeah, and you can calculate that gold will probably go to at least $3,500.
In a recent interview with Wall Street Silver, independent financial analyst Florian Grummes delved deep into the state of the market, discussing crucial topics like recent bank runs and the pivotal role of the Federal Reserve. Grummes also shared his intriguing insights and future predictions for the precious metals market, specifically focusing on gold and silver. One of the key takeaways from Florian Grummes' analysis is his belief in a significant upswing in the price of gold. He suggests that gold could reach a remarkable $3,500 in value. However, Grummes advises caution, emphasizing the importance of timing and closely monitoring support levels following a breakout. Interestingly, this perspective contrasts with the predictions of coin price forecast experts, who foresee a gold rate of around $2,030 for 2023. They project a continued upward trend into 2024, with gold expected to reach $2,032 in the first half of that year and potentially culminating at around $2,100 per troy ounce by the end of 2024. It's worth noting that Trading Economics global macro models and analyst expectations predict gold trading at approximately $1,946.33 per troy ounce by the end of this quarter. This underscores the divergent opinions within the financial community regarding gold's future trajectory. One factor that appears to be influencing gold prices is the Federal Reserve's stance on interest rates. Grummes points out that investors are factoring in a pause in interest rate hikes, contributing to the recent uptick in gold prices. Market participants are closely monitoring the Federal Reserve's rate outlook. Additionally, Florian Grummes hints at a potential chart pattern that suggests gold may be on the cusp of another substantial increase in value. However, he underscores the need for gold to overcome a specific price level to trigger this anticipated surge. Before diving into Florian Grummes' insightful interview, subscribe to our channel and give this video a big thumbs up.
This is the last 23 years of gold price. You had this famous Gordon Brown double bottom at $250 in 2000 and 2001, when the British finance minister sold the British gold reserves at a low of a 20-year bear market. Yeah, and then this crazy, unbelievable bull market started. That's basically also when I started looking at gold. In 2001, I bought my first Kruger round, and gold went up 656% in just 10 years, right?
Wow.
This was before Bitcoin. And that was the decade of gold. And we had this all-time high at 1920, and more or less exactly that's where we're trading today. 12 years later. It was followed by a severe correction back then. Gold sold off 45% in a little bit more than 4 years, found a final bottom at 1,045, and then basically climbed all the way back up to $2,075 in the summer of 2020. There was nearly 100% gain in 4.5 years. And then we've seen this double top and a severe sell-off last year towards a triple low at 1615. That was a sell-off of 22% in 2.5 years, or 2.2 years. And since then, gold has nicely recovered back up to this all-time highs. So the big picture, most of the gold bugs know it, of course. It's most likely a cup and handle pattern in the making. You could, of course, draw this cup a little bit smaller like this, or wider. We have to see how it plays out, right? But generally, this is a cup and handle, and this is basically the horizontal resistance, more or less, around, let's say, $2,050 to $2,075. That's the big number that gold needs to take out. I think if gold now moves back up above 2,000, it's clear what it's going to want to do. And I think the market will only focus on the breakout. So that's actually very important to be aware of now. It doesn't take much for gold to really concentrate the focus on the breakout and on new all-time highs. Actually, we're trading at 1920, 25 right now. So if gold can take out 1985, which is the last high from July, all eyes will be on the round psychological number of 2000. Once it gets to 2000, it's clear now it's going to attempt for the fourth time the breakout above 2050, 2075. So game is on basically once gold clears 1985. That's my thinking. Let's move on and zoom in a little bit. This is a daily chart. We had this triple low last year in October and November, and then gold rallied up towards end of January 1959, if I remember correctly. Then we had a double low in early March, and that's when the bank run in America suddenly started. And basically this changed everything, and gold rallied to 2067, slightly missed the all-time high in early May. I warned back then that this is probably topping out here. We had a nice rounding top. Gold sold off first low end of June 1893. Covered towards mid of July. I think that's the 1985 I just talked about. And then we had a slightly lower low at 1885 in mid of August. So congratulations to the bears. It took them 2 months to push the gold price $9 lower.
Spot gold gained a modest 0.2%, reaching $1,928 per ounce. Florian Grummes, a keen observer of the gold market, identifies the $1,985 mark as pivotal. He suggests that while there might be a possibility of another drop in gold's price, the potential for it to surge to new highs is quite promising. Shifting our focus to silver, Grummes delves into its price pattern analysis, identifying it as having a triangle shape. In the case of silver, two scenarios come into play. It could either break out or experience a slight further decline. Recent developments in the silver market saw the price breach the critical level of $23. This breakthrough was significant, leading to the closure of the daily candlestick above this level. This development effectively halted the previously suggested negative outlook for silver, setting it on a short-term recovery path. The following optimistic targets for silver start with a potential move towards the 23.70 price range.
We still have this kind of pattern here. If you draw these trend lines, you can see that this formation here basically is some form of a triangle or wedge kind of correction. And the classic textbook would basically say A, B, C, D, and we're still missing the E. It could still be, according to that pattern, that gold still needs to basically come. It has to. If it fails at this downtrend line here, then it very likely will come down somewhere here, right?
Interesting.
If it can break out now, of course, the pattern is done, and it probably will very likely run immediately to this 1985. And as I said before, that's for me right now the line in the sand, where basically the focus on new all-time highs kicks in. So currently, still a little bit higher probability, I would say, as one more pullback.
Right.
Then the breakout above this out of this wedge, and then towards the all-time highs, obviously. So this blue box here would be probably an interesting zone to add. And of course, if it breaks below this green support line here, we could go lower as well. Next support is somewhere here around 1800. I don't see it right now. I think that worst case right now is 1860 to 1875 probably.
Right.
So it's very manageable downside from here.
Yeah.
And the upside, as we've seen before, I mean, it can go to $2,500 within a few months. So risk reward is amazing now. So this is silver the last 3 years. And of course, we had this Corona crash down here, right? And we have a trend line, and we have an uptrend, and we have a downtrend line. So this is obviously some form of a triangle that silver is moving in. We have also another trend line since the low a year ago, which, by the way, silver surprisingly showed up with relative strength and has bottomed before gold. last year in autumn, and the same happened now this year in June. I think it's interesting. Usually silver is rather late than early, but it seems that this time it's different. And yeah, you had this low back in the Corona crash. Obviously, you had those two tops around $30.
Right.
You had last year in September this triple low where silver made actually slightly higher lows already, and then you have these lower highs since May. And now it's interesting what is going to be happening. If silver can hold this trend line, it probably wants to break out directly, right? Otherwise, if gold makes that move that I showed and we're going back towards 1875, silver might take one more dip down here and test this green trend one more time. Exactly. So that would basically be my kind of like worst case scenario in the short term. So that could also be another very interesting buying opportunity down here. And again, as you can see, there's also not a massive downside risk in silver. So it's all very manageable, the downside in the precious metals now.
As we wrap up this insightful discussion on the state of the precious metals market, how do you see the future of gold and silver unfolding amidst the changing dynamics of the Federal Reserve's policies and market patterns? If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.